All right, strap in everyone because we are diving deep into the world of Nepalese finance today. We're talking ADBL, the Agricultural Development Bank Limited. You want to know if it's a buy, a hold, or a sell, and we are really digging into this research report to help you make that call.
Now, ADBL is particularly interesting. It's not just any bank. It's got this deep connection to Nepal's agricultural sector, really woven into the fabric of the country's farming industry. So that adds a whole other layer for investors to think about.
Absolutely, and we're not talking about some new kid on the block here. This bank has been around since 1968, a cornerstone of the Nepalese economy. Just to give you a sense of scale, we're looking at a share price right now of 387.5 Nepalese rupees. And get this, a market cap north of 52 billion. That's billion with a B, folks. ADBL is definitely on the radar. And then you add in the government backing. A 51% promoter ownership, that's a pretty big deal. Almost like a safety net, wouldn't you say?
It definitely is something to consider, especially in a volatile market like this one. And speaking of market performance, ADBL's recent track record. Well, it's been impressive to say the least. Just over the past year, it's returned 49.9%. That's blowing its peers out of the water. Most of them are stuck around that 25% mark.
Oh, wow, hold on. I'm doing math here. That's almost double the sector average.
Yeah.
Okay, you've got my attention.
And it gets even better. Over 2 years, that return jumps to almost 20%. And if you look at the past 5 years, we're talking a whopping 85.91%. But here's the real kicker. In the last 6 months alone, ADBL has skyrocketed, a 71.31% return.
Okay, now that is what I call impressive. That's a meteoric rise. But you know what they say, past performance isn't always a guarantee, right?
Yeah.
So let's talk about the here and now. What's ADBL's current financial health looking like?
Right, gotta make sure it's not all smoke and mirrors. When we look at their quarterly earnings, they're up a very healthy 33.57%. And year-on-year expansion is sitting pretty at 17.95%. This tells us they are consistently profitable, always a good sign.
Absolutely. Slow and steady wins the race. At least that's what they tell me. So how do these numbers translate into something investors can use? What should they be looking at?
So one of the key metrics is the price to earnings ratio, the PE ratio. ADBL's is currently at 15.8. Now what that means is essentially you're paying 15.8 rupees for every rupee of ADBL's earnings. To put that into perspective, similar banks in other emerging markets, you often see PE ratios in the 20s, sometimes even higher. So some investors might look at ADBL and think, hey, this could be undervalued.
Interesting. So potentially a good deal then. What about other indicators?
Another important one is the price-to-book ratio, the PD ratio. For ADBL, it's currently sitting at 1.64. Basically, this means the market values ADBL at 1.64 times its book value. It suggests a slight premium, but not something crazy considering its growth potential. And finally, we look at the return on equity, or ROE. This measures how well a company uses its equity to generate profits. ADBL comes in at a respectable 11%, which is actually quite strong within the banking sector.
Okay, so far so good. But there's one thing in this report I have to ask about. It might be a deal breaker for some. That 0% dividend yield. We're talking no immediate payouts to shareholders here.
Yeah, definitely something to highlight. Basically, ADBL is choosing to reinvest those earnings back into the business instead of paying them out as dividends.
So for investors looking for that steady income, ADBL might not be the right fit right now. But for someone with a longer-term view, could this actually be a good thing?
Yeah, potentially. I mean, think of it this way. ADBL is basically saying, we believe in our future so much we're putting our money where our mouth is. They're focused on growth, maybe expanding operations, maybe even breaking into new markets, or even developing new financial products specifically for Nepal's agricultural sector. So this reinvestment strategy could lead to much bigger profits later on.
That's a good point, delaying gratification for potentially a much bigger slice of cake later. Okay, so no dividends. But what about risk? Every investment has some element of risk, right? So what are we looking at with ADBL?
Oh, absolutely. Nothing is risk-free. But ADBL does get a gold star for stability. Their bankruptcy risk score is really low. Very small chance of facing serious financial troubles anytime soon. Also, their debt-to-equity ratio, which basically tells us how much debt they're using to finance their assets, that sits at a pretty reasonable 8.87.
Okay, so that's good, reassuring. It sounds like they're managing their finances responsibly. But let's switch gears for a second and talk about momentum. It's great to look at these fundamentals, but we also want to see ADBL making moves in the market, right?
Absolutely.
Like imagine a bicycle going uphill. We want to know if it has enough speed to keep climbing
Exactly.
without losing steam.
So looking at some of the technical indicators, ADBL is showing some serious momentum.
Mm.
Their RSI, or Relative Strength Index, currently sits at 63.64. Now, for those who don't know, the RSI, it's basically like a thermometer for investor enthusiasm. Above 70, that usually signals a stock is overbought, investors are getting a little too excited, might be due for a dip. Below 30, and it's just the opposite, oversold, could be undervalued.
So 63.64, where does that put ADBL in our thermometer here?
Getting a little warm, approaching that overbought territory, might give some investors pause. It's like that popular restaurant everyone wants to get into. Bit of a wait list.
Makes sense. Everyone loves a winner, and it sounds like ADBL has been on a roll.
Indeed. Now, another indicator we look at is the MACD. That's the moving average convergence divergence. Don't worry about the complicated name.
Yeah, sometimes I think they make these names up just to confuse us.
But basically, think of the MACD as a trend spotter. It helps us see the momentum, the direction of price movements, and right now, ADBL's MACD is flashing a bullish signal, suggests a potential upward trend. Think of it like ADBL is a surfer riding a wave, and the MACD is saying, this wave's got more room to run.
Okay, so two indicators so far, RSI and MACD, both pointing towards positive momentum. But you did say potential upward trend there. Anything we should be watching out for?
Right, because there's one more indicator we need to consider, and that's the stochastic oscillator. Now, this one's a bit more short-term focused, and it suggests that ADBL might be slightly overbought at the moment. Imagine a car driving a bit above the speed limit. Exciting, sure, but there's a chance of getting pulled over.
Ah, so a little cautionary note amidst all this good news. But for investors playing the long game, does this short-term overbuying really matter that much?
That's a great question. It really depends on the individual investor's risk tolerance, their timeline. Someone looking for a quick profit, they might be a bit more cautious. But for someone with a longer-term view, this short-term blip, it might not be such a big deal.
Right, because in the grand scheme of things, a few weeks, even a few months of overbuying, it's not going to matter if ADBL keeps growing in the long run.
Exactly. And that brings us to another crucial question, which is ADBL's growth prospects. Are we talking about a slow and steady climb, or are they about to take off? To answer that, we need to look at the G-score. This basically measures a company's fundamental growth potential.
Okay, so what's the G-score telling us about ADBL? Are we about to witness an economic miracle here?
Well, I wouldn't say a miracle, but ADBL's G-score, it falls into the moderate range, which, when you think about it, makes sense. We're not talking about some tiny startup with unlimited room to grow.
Right, they are already a major player in the Nepalese financial world.
Exactly. They're what's considered a high-cap stock, meaning they have a large market capitalization. These companies, especially established institutions like ADBL, they tend to offer stability and consistent, although moderate, returns.
So not a rocket ship to the moon, more like a reliable, all-terrain vehicle steadily climbing the mountain.
That's a great analogy. Less about explosive growth, more about sustainable progress, which can be very appealing for the right investor.
Okay, so we've covered a lot of ground here. Impressive track record, solid financials, that zero dividend policy that's got us all thinking, positive momentum, maybe a tad overbought, and a G-score that suggests steady growth ahead. But let's bring it all home. Our listener is trying to decide. Buy, hold, or sell ADBL. What's the bottom line?
Right, it's decision time. Let's put it all together. We're looking at a financially healthy bank, long history of success, consistently outperforming its peers. And that government backing, that adds another layer of security, especially for those investors who are maybe a little more risk-averse.
And don't forget their deep roots in Nepal's agricultural sector. That's not just a catchy marketing line. It's their bread and butter.
Absolutely. ADBL isn't just riding the coattails of the general market. They're intertwined with the success of Nepal's agricultural industry.
So for our listener who's been eyeing ADBL,
Right.
what should they be thinking about right now?
Well, if they're looking for stability and steady growth, moderate risk. ADBL seems to tick those boxes. But if they're looking for those high dividends, or expecting a quick profit, this might not be the one right now. Those zero dividends tell us ADBL is playing the long game. They're prioritizing growth over those immediate payouts.
It's that classic slow and steady wins the race versus high risk, high reward dilemma.
Exactly. It all comes down to aligning your investment choices with your goals and your risk tolerance.
Absolutely. No one size fits all in the investing world. Now, before we wrap up, I want to go back to something you mentioned earlier. ADBL's unique position within Nepal's agricultural sector. What are some of the potential challenges or even opportunities tied to that connection? Things our listeners should keep in mind.
That's a great point. Because remember how we talked about ADBL's loan portfolio, how it's tied to the agricultural industry? Well, any changes in Nepal's agricultural policies, regulations, subsidies, even environmental policies, those could all have a ripple effect on ADBL.
A domino effect. Imagine, say, a new government initiative pops up encouraging sustainable farming. ADBL might need to shift their lending strategies to support that. Could be a huge opportunity.
Exactly. Or, on the other hand, imagine a drought hits crop yields hard. That could lead to more loan defaults from farmers, right? Impacting ADBL's profitability.
It's a reminder that ADBL is really tied to the fate of Nepal's agricultural landscape. Things beyond their control, weather patterns, global commodity prices, those could all come into play.
It really highlights why due diligence is so important when you're investing. You've got to look beyond the balance sheet. Think about those broader economic, even geopolitical forces at play.
Connect the dots, see the bigger picture, and be prepared for those curveballs life throws at you.
Well said.
So there you have it, ABBL, a bank deeply rooted in Nepal's agricultural economy. A fascinating case study in global finance, wouldn't you say?
Absolutely. And a perfect example of why the best investors stay curious. They ask questions, and they're not afraid to dive deep.
Couldn't agree more. Until next time, happy investing, everyone.